We like some of the Gulf countries, so Saudi Arabia and Kuwait, which are dollar linked, and obviously oil economies. We like Nigeria, where we have an overweight position. In Sri Lanka, we have a very big overweight position because it's a very, very cheap market with some very interesting dynamics. In Vietnam is a much loved country by many people at the moment. We also like it, and particularly the banks and the consumer space there. So Saudi Arabia is clearly an oil economy going through radical transformation at the moment as Mohammed bin Salman makes some fairly radical reforms and is opening up Saudi Arabia for there's a very young generation there that are demanding these reforms. It's a country that whose currency is pegged to the US dollar. That means that when the US raise interest rates, so does Saudi Arabia, and that leads into widening margins in the banking system, which is a very attractive space at the moment. The correction in the frontier markets can almost entirely be accounted for by the correction in the Argentinian stock market, which is an unusual set of circumstances from a country that was very big in the index. As a consequence, the asset class is down 15% year to date. But however, almost all of that, as I say, 13% can be accounted for by the correction in Argentina. The asset class more broadly is cheap. It's on about 10 times earnings. And so, yes, this is a very interesting time to be adding to the asset class. We've been, after this big correction in Argentina, we've been topping up some positions in Argentina, given that the market has corrected 60%. It looks like the authorities' response has been completely orthodox. They've got the backing of the IMF, and the currency has now seemingly stabilized. So we've been cautiously adding into some very select high-quality positions there. In the Middle East, we've been topping up our positions in Saudi Arabia, obviously benefiting from the rising oil price at the moment, and in Kuwait as well, where we now have a healthy 17% position in the fund. This is a fund for a long-term and patient investor. It's going to be, I'm fairly convinced the trajectory is up. You're going to get a very good return, but there is a perceived higher risk, and you are going to get headline risk with this fund. So there are going to be countries that have problems along the way over the next 5-10 years, and it's my job to navigate those, but you're going to open a paper and you're going to see that country X is having a problem. But you will see that also that's just one tiny part of the portfolio, and actually longer term the performance should be very strong.